The stock's looking to chase more history. A day after the Dow and the S&P hit record intraday and closing highs. It was the Dow's 12th record close of the year, S&P's 19th. Also had the tech sector posting its best day in 7 weeks, guys. Oil, highest intraday since July. Banks, best week since May. Copper, 6-week high. The dollar, worst week since February. Lots of things working here, Jim.
These are all the things that I've been looking for. In Europe, the euro being strong really helps a lot of the companies that report right out of the chute in a couple of weeks. I think that oil going up, believe it or not, is regarded as being positive. People feel that maybe the economy is more robust. I've been looking for 1.5% growth in oil as opposed to 1% last 20 years. There is a belief that China's stimulus is in full force. This Baltic Freight Index pretty much going up and up and up. The banks, what can I say? You raise rates and at the same time long-term rates go up. There's a very good story to tell, which I hope Jamie Dimon will tell on Monday when I sit down with him, because besides their fortress balance sheet, there's the ability to lend and make money.
It's funny, all this in the face of what I think many would now call a trade war with China.
Yes.
In the spring, or even as far back as this winter, when we were wondering how far tensions would go or how bad things would get, many would have thought the market would not be a particularly friendly place.
Right.
And that has ended up not being the case at all.
Look, there was tremendous multiple compression. I was doing some work on Caterpillar yesterday. Caterpillar led the industrials. And why did it lead the industrials? Well, because it turns out it's selling only at 12 times earnings. I mean, you got the average stock selling at 20 times earnings, and you just figure like, okay, the penalty box, they're out. It's like a 10-minute major, okay? And then they're done. And I think that what's happened is that people are saying, you know what, Boeing, another one that's been crucial to this rally, almost at its high. Hey, you know what? Boeing has got a lot of orders, and maybe we're overdoing how important China is. Now, I took a lot of blowback yesterday when I said the consumer may not be hurt nearly as bad as people think. Well, that's because, not just because, look, the tariffs are not going to be good for the consumer, but we got to start recognizing the retailers are going to eat some of this. And if you take a look at the retailers and how poorly they traded yesterday, that may have been the key to the rally.
You've been really consistent on that. And now Reuters out with this story that Walmart wrote a letter to USTR saying that new tariffs would force price hikes on goods like bicycles, Christmas lights, grills. You got a piece on Procter and the degree to which they're going to be under pressure on some of these things?
Well, they're going to have to eat some. Mike Cramer, which we're going to talk about later, certainly mentioned in the call. I keep coming back to Death Star. I mean, I think that what look, not that the president has thought through the internet channel, but Amazon's going to keep prices low. So the margins are going to get hurt for retail. Now, I think it is a bump. I don't think it's going to last forever. A lot of these, many of these companies have the ability to source elsewhere. PVH, which actually has led apparel down, and I think is probably way too cheap. That's Manny Chirico. Look, they have making some apparel in China. They can switch, but they can't switch instantly.
Or for the same price, maybe.
Yes, yes. And I think that, look, you're going to have to take a hit. The consumer will take a hit. But at the same time, the consumer, I mean, what are we going to do? When you had those jobless claims yesterday, back since 1969, is the consumer not more in shape? You speak to some of these banks, the balance sheet of the consumer is the best they've ever seen. I think when I read a lot of the articles say, well, look, this is really going to hurt the consumer. But if the consumer has no problem getting a job, and the consumer is got a good balance sheet, and there's an average family $1,600 cut in taxes, well, then this is the time. And I think that the president is reacting to the fact that it is the time. And that's one of the reasons why.
Although real wages on a real basis aren't going to the moon, Jim, barely positive.
Totally true. But I would say that when you hire this many people, what happens when you hire people? IRA, 401k. And that IRA 401k money into the S&P, it matters.
It does.
There's been just waves of money.
Although I don't know how many of these jobs really are coming along with the full benefits package, but
very good
I'd be
point.
Curious to
Not
know.
good, but there are people who can save. More people can save than they have.
It's a good thing. There's no doubt. And to your point,
oh my God, David,
your point,
this is
going to wage a war of trade against China. This
yes.
is probably the best time to do it. And certainly there doesn't appear to be any let up. Trump's most recent comments continue to at least reflect, I think, what would be his belief. He's got a lot of leverage here, Jim.
Right.
But I still wonder, yes, whether or not and when we are going to start to see unintended consequences.
Well, I think 2019, because I think that there is such a belief by money managers now is like, holy cow, these averages are going up. I got to get into FANG. I got to get FANG. I got to get into some the banks. Dude, banks are selling 11 times earnings, so it's not like you go in there and you start buying some Bank of America. You're paying too much.
Would you buy Wells?
Yes, absolutely.
You do?
I would absolutely buy Wells. I think that Wells is in a, when I saw the expense cuts, one of the things that I've been waiting for is the expense cuts. The franchise is intact. It's not like they are exactly hurting for business. Lending's pretty good. It's lending is look, the only chink in the lending armor is that the consumer's so flush they're not taking the loans. Remember, about 25% of these houses these days are being bought for cash. Really negative housing read through today. Morgan Stanley, just a terrible on.
You got the existing numbers yesterday.
They're not good,
yeah.
And that is the weakness. That and you would think that you have China, you have housing. You have auto, all bad. Who would have thought that you could have an average?
Others argue still early. I mean, housing has a long lead time, but pretty consistently a slowdown in starts and sales does lead to recession.
I go back to what Doug Yearley said. He's the CEO of Toll Brothers, came on Mad Money. I mean, geez, this is a halcyon time for home builders. It's great. There's not that many homes being built. The pricing's holding up for, holding up for Toll. They're buying back a huge amount of stock. There's just not a lot of homes being built. And a lot of that is zoning. We don't talk enough about zoning, how hard it is. There's been a lot of housing that's being built a little bit further from cities. I want to talk about with Jamie Dimon, inner city housing is making a comeback in a lot of different places. I have a lot of friends who are buying homes in cities.
You do?
Yes. Buying up Pittsburgh homes. Nashville. I think Nashville's played out. Charlotte.
Another banking capital. Right, it is, yes.
He's been agreeing with me all day. It's starting to make me uncomfortable.
It's not going to last.
How about the fact that that those comments about the robust consumer that you agree with?
Yes, I actually tend to go and say things that are things that are true.
You're addicted to the facts.
Yeah. Thank you for saying that.
Yeah, you're quite welcome. Yeah. But I just think that the banks are going up because the Fed's going to raise rates. And lending's okay, but the margins are going up. Remember what they're paying you. Go look at what they're paying you. It seems like it's the same since the Fed started raising rates. I have a JP Morgan account. I swear to, I'm telling you, I'm not making anything on it.
It's like point. What is it? Point.
I don't know, but probably charging me more than.
Yeah, no, they are charging.
That's why. Yeah.
2-year is yielding more than the S&P.
Yes, rather amazing. Periodically, you see dividend boosts that are like Texas Instruments had a nice dividend boost yesterday, and I look at these dividend boosts and say, well, there's at least competitive.
Yeah. We'll get to some of the div hikes. By the way, May's speaking right now in the UK, statement on Brexit saying that no deal is better than a bad deal. So we'll watch for her statement in a little bit, David, and I know that leads us to other stuff regarding the UK.
Yeah, we might as well stay in the UK briefly. Listen, not much more to say than we had said yesterday as you take a look at Theresa May there speaking live in London. But we are going to get the beginning of that auction for who's going to own Sky, the British broadcasting company. Of course, it's not just a distributor, though it's known as that. It also significant holder of content assets as well. And it is something that Disney certainly had hoped to own when it negotiated the deal to acquire Fox. But Comcast, her parent company, came along and made a bid for the company that was in excess of the $10.75 original deal that Fox had to buy, the 61% it didn't already own. It's gone up from there, and we're now $14.75 on one side and 14 pounds on the other side from the Fox Disney camp. We've gone through this. This is unusual, though, that being the actual auction that's going to start to take place a few hours from now and how it's going to end, the 3 rounds of bidding, potentially. And we don't know where the numbers are going to go or how much higher either side will go. I've certainly, like everybody else, been trying to figure that out. But as you might imagine, the principals are reluctant to sort of give away their bidding strategies. For Fox, there's a desire to own it, and of course, they already own 39%, so even if Comcast were to pay even more, it's only a benefit to Disney, in fact, because they will still own 39% of an asset that they've already priced originally at a lower number. Some surprise that the two companies were not able in some way to figure out a settlement.
Yeah.
You know, there's a lot going on between them. Does if Comcast wins, do they really want to have a partner in Fox or Disney in Sky, or will Fox decide to tender into whatever the number is that Comcast comes up with if they in fact do raise from $14.75? Alternatively, they're also partners in Hulu. And then there's a larger question, Jim, about Disney and its direct-to-consumer strategy that I've heard from a number, obviously from the crowd, the guys in the bleachers, saying, do you really want to have what may be 3 distinct direct-to-consumer offerings out there? In other words, Hulu, and then you're going to have the sports, and then you're going to have the entertainment if you're Disney. It's such an important part of their strategy for the future. It's beginning now. It's going to be revved up, of course, key by when they close the Fox deal. But people do wonder, do you incorporate it all in Hulu? Do you need Hulu? Is it confusing to the consumer? And one final point, they will have to start consolidating Hulu on their own balance sheet at Disney. And Hulu's not making any money.
No.
It's losing money. So that's something to keep in mind for the numbers.
Okay, so David, is there any reason why Disney shouldn't bid more in order to be able to ultimately end up with more money itself? In other words, what's the incentive not to?
Right. I mean, if you believe Comcast will come up, and you make them pay more, and your value of the 39% is worth more, I suppose that's a fair point. What I am hearing is that that's not Disney's intent, that to the extent that they believe it's a strategic asset and gives them important markets that they want access to, they want to be there, and they'll make a decision accordingly. As I said yesterday, I think there had been a time not that long ago where it looked unlikely that you'd see Disney really make the move, but it may be lobbying from the Fox camp that at least has got them to the point where they're considering it. But we'll see. Meanwhile, look where Sky's trading, Jim. They're looking for just blowouts here. I mean, they expect this auction to result in some number that everybody would tell me would be crazy town. At least excess of 16 pounds, let's say.
Cable town, crazy town. It is, without a doubt, incredible where that stock was before this began.
That's another one thing. When you are selling a company, try to find another bidder. Just think about Fox, what they sold to Disney for originally. It's 40% higher because Comcast came along. $10.75 here for Sky, and now we're at $14.75 and going up. Always try and find another bidder.
Incredible.
That's my lesson.
Guys, May says we are at an impasse with the EU. Will not overturn the referendum. Must prepare ourselves for no deal. The pound is set for its biggest drop in 5 months.